Hi there, this is another great opportunity. Lemonade. The market cap right now is about 3 billion. And by the way, the management expects the revenue to increase to 10 billion from 500 million to 10 billion. And that's quite a lot. Now, if you wonder what this company does, they sell insurance policies. Here, they operate in those industry renters, homeowners, car, pet, life insurance. Now, if you look at the revenue here, you can see that it has increased over the last 3 years, 22, 23, 24, from 250 million to over 500 million. So it doubled in 3 years. And earnings over the years have decreased from close to 300 million to 200 million. And this is a great sign. As long as revenue goes up and the earnings decrease, market cap will go up. And now, if you look at the stock price, is about $41 per share. It has doubled in just 1 year. And that happened because the most important indicator for an insurance company is the loss ratio. Over the years, you can see here in 2022, the loss ratio was about 90%. 2023, between 83 and 87. 2024, between 63 and 79%. So the loss ratio has decreased. And this is a great sign. What does it mean when you see a decrease in the loss ratio? Well, when they report the ratio below 100%, so below 100%, Lemonade makes money. If that ratio is above 100%, they lose money. Of course, after this, they have this ratio close to 80%, and then you add their expenses. And as you can see, their expenses for the moment are quite high because they are at the beginning. They are growing a lot. And as the management expects this revenue to grow to 10 billion, guess what will happen to their market cap? You might easily see a 3x from this investment. But of course, that will happen. You have to see revenue to go to 10 billion. That can easily happen because it's not that hard to sell insurance policies. But the most important thing is to maintain the loss ratio low and become profitable, the earnings to reduce and report a positive number, positive earnings. And if that happens, Lemonade for sure will triple from this level, this low market cap. By the way, if you look at the revenue, it's quite small, 500 million, and it's easier to grow from 500 million to 10 billion. Imagine if the revenue was around 10 billion. That would be harder for them to grow by 10x in the next 5 to 10 years. Another important thing is the number of members. Over the years, it has increased from 1.7 million to over 2.5 million Q1 2025. And this is great, another indicator you can follow. And if you look at their balance sheet, they have 300 million in cash here, total investments 600 million, so in total more than 1 billion. So they have money to pay their claims if they arise more in the future. Debt 100 million and some unpaid claims about 300 million. So they have enough cash to survive. Then another indicator is the number of shares. Yes, it has increased a little from 600 million to 700 million, and you have to be careful here because if they continue to issue more shares, that will be dilution for shareholders. For the moment, it's manageable as long as they keep growing, reduce their losses. And then you have to look at their market size. How much can Lemonade grow in the future? For instance, as they operate in more industries, renters, homeowners, car, pet, life insurance, you have to look at each industry, sub-niche. For instance, the total market size for renters was about 3 billion in the US. Only in the US. And they have quite a market share, about 4% here. They focus on this. Then homeowners, 100 billion. And be aware of this, of the revenue, 500 million. So this is the market size for premium claims earned. So from 500 million, they can go to more than 10 billion. So 100 billion, car, 300 billion, another big market, pet 2 billion, life insurance 150 billion. So as you can see, and here enters 3 billion. So as you can see, if you add them all, the total market size is about 500 billion. Now, of course, they won't get the entire market because there are other competitors much higher, much larger than Lemonade. But imagine 10% market share of this total market size. This means 50 billion in revenue. Only 10%. Only 10%. And the management expects 10 billion in the next 5 to 10 years. So it's achievable. It's achievable. But the most important thing, and here is the thing, yes, the stock price more recently has more than doubled in recent years. Be aware of this loss ratio, because if it goes higher from 70 to 80 or back to 90, then the stock price will go down. Be aware of this. I mean, they can grow a lot in this industry. They have a lot of place, a lot of room to grow. But if they don't report some earnings and they don't maintain their loss ratio low, that will be a problem. So this is the most important thing for Lemonade in order to succeed. Watch closely this indicator. And the right time to invest in this company? Yes, might be right now, especially as they expect to grow. As long as they keep growing, you can buy it at any price for the moment. But if they face other problems, then you have to be very careful what price you pay. And for sure, any insurance company will face some problems in the future, but nobody knows when. If you are lucky, then this might be a straight line to 10 billion revenue, reduce their losses, and of course the market cap may more than triple. And that you make more than 3x on your money. But if they face some bad problems, that will be quite bad for shareholders. So be aware of the price you pay. Now, if you want better investment ideas with low risk and high returns, then you can simply join my membership. Go to my profile, press join, and there you can have access to my portfolio and see exactly what I buy, what I sell. And of course, you can also have access to other business analysis. Plus, you can ask for more questions, or if you want me to analyze another company you want to invest in. So it's quite easy. If you want to make more money with low risk, go to my profile and press join. And if you have other questions about this company, Lemonade, please let me know in the comments.